I think we get to $1 million Bitcoin, at least like on a tick, right? I think we can get there. I think if we really see a concerted global effort by all the major economic blocs to financially repress people into buying their bonds, and we have this little door of crypto open, and the bond market is what, I don't know, however many tens or hundreds of trillions of dollars,
Trillions,
right? We
yeah.
don't need all that money to come into crypto. We can see it a little bit. And remember that it's a marginal price. It's not about the whole market cap.
Hey guys, welcome back to Everyday Finance. In this video, Arthur Hayes discusses the Bitcoin and crypto. According to Arthur Hayes believes that we could potentially reach a value of $2 million for Bitcoin. He is optimistic about this possibility and believes that it could happen if there is a strong global effort from all parties involved. Major economic blocs strategically manipulate individuals into purchasing their bonds, while we encounter a small obstacle in our path. He seems unaware of the vast sums of money involved in the cryptocurrency and bond markets. We don't require an influx of massive funds into crypto. Even a small amount can make a significant impact. It's important to consider the marginal price rather than focusing solely on the overall market cap. The price may potentially reach 1 million bitcoins at Satoshi trades, but that would likely be the final price. Understanding how markets operate revolves around the concept of margins. When considering global fixed income investors, their decisions are primarily influenced by marginal factors. Someone who holds bonds and feels they are getting a bad deal is considering allocating some of their money into cryptocurrency. He believes our imagination about how high we could go is limited, considering the vast potential of the global bond market. It's incredible how bond investors can have such a significant impact when they collectively decide to steer clear of a specific market. They will transform into something else, and it will have far-reaching effects on the global economy, fortunately for us. We have this thing called crypto, where we have a small door through which some people can be saved. Unfortunately, most people will not be able to benefit from it. Those of us who hold these assets, he believes, will experience significant gains in fiat terms. Dealing with a myriad of challenges is inherent to the role of assessing the worth of your investment portfolio, and lots of things Arthur Hayes discussed, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Everyone comes to crypto with their own experience in whatever field, and there's probably something in crypto that speaks to that. Say that you're some sort of creative artist, maybe it's the NFT space or creator, sovereign identity, that kind of stuff. Go to where you understand, start reading these white papers, see what makes sense, see what you can try out. They can bring this experience that you already came to crypto with into crypto, and just go down the rabbit hole that way, rather than saying, okay, whatever I heard on the Discord channel that went up 100% last weekend, I'm just going to go try to ape into that and learn that way. I mean, of course you can do that, but I think you'll find it a little bit more interesting if you try to marry it with something that you already know a little bit about. Like, what is the problem in the old industry that maybe you work in at a full-time job that this crypto vertical is trying to solve, and does it make sense what these people are doing or not? And start your journey that way, and that'll get you to have a critical eye of reading what people say in a white paper. Does this make sense? And you'll understand better. So I think that's probably the better way for people to go. I think we get to $1 million Bitcoin, at least on a tick, right? I think we can get there. I think if we really see a concerted global effort by all the major economic blocs to financially repress people into buying their bonds, and we have this little door of crypto open, and the bond market is what, I don't know, however many tens or hundreds of trillions of dollars,
Trillions,
right?
yeah.
We don't need all that money to come into crypto. We can see it a little bit. And remember that it's a marginal price. It's not about the whole market cap. The last price is only at Satoshi trades at 1 million Bitcoin, but that'll be the last price, right? That's how it works in markets. It's all about at the margin. So at the margin, if we have global fixed income investors who hold bonds who are like, I'm getting a bad deal, at least I'm going to allocate some of this money into crypto, then I don't think we have a big enough imagination about how high we could go, because the global bond market is just so massive. And when the bond investors make a decision collectively that they don't like being in a particular market. They will stampede into something else, and it will cause reverberations around the global economy. And thankfully, we have this thing called crypto. We have a little small door, and some people can be saved. Most people will not. But those of us who hold these assets, I think, are in for some massive gains in fiat terms. And that comes with a whole host of issues in and of itself. Is that the right way to value your portfolio or not? It's more of a philosophical question. But I do believe that if we really hit this sovereign debt bubble, if that is deflating this cycle, then it's going to be so ridiculous how high this stuff goes.
Arthur Hayes believes that individuals bring their unique experiences from various fields when entering the world of cryptocurrency. It is likely that there is something in the crypto space that resonates with each person's background as an imaginative creator. Perhaps it's the NFT space or the intriguing concept of creator sovereign identity and similar topics. Begin by reading these white papers to gain a better understanding of the subject matter. You can give it a try and see what you can bring. Seize the chance to explore the complexities of the crypto world and succumb to its limitless potential. Nonchalantly disregarding any information he heard on the Discord channel, he decides to impulsively invest in whatever skyrocketed by 100% last weekend. Delve into that and discover the true meaning. Of course, you have the option to do it that way, but you might find it more captivating to explore the possibilities of merging it with something else. Something that you already have some familiarity with, such as identifying the challenges in the industry you may be employed in, working in a full-time position that this crypto industry aims to address and hasn't yet resolved. It's important to understand the actions and motivations of these individuals before embarking on your journey. This will help you gain a better perspective. With a discerning perspective, carefully analyzing the words penned on a blank sheet of paper can lead to a clearer understanding. Perhaps this approach is the optimal path for individuals to follow. Let's back to the Arthur Hayes interview.
Yeah, I'm not worried that they don't have the money.
Yeah,
my worry is more, hey, there's some political thing that happens that we have no idea what it is. Janet Yellen wakes up out of bed on the wrong side one day and she decides, okay, no more Tether, right? It's literally just a phone call. Hey, I don't like that you're banking Tether. Well, when the U.S. Secretary says she don't like that you're banking Tether, what do? You fucking debank the Tether. And there goes Tether, right? And so it's just that simple. We have no way to understand when that's going to happen, why that would happen, what the complex, global political things that are going on in the United States would make her do something like that, or Powell, or any large banking. We don't know, but we do know here's the risk. Are you willing to take it? That's all we know right now.
Do you have any similar concerns about the ETFs?
I think the ETFs, the concern is, number one, the pernicious negative effects of passive investing as a thing. And we've seen that effect in traditional markets where we've destroyed price discovery. The stock that's most valuable is the stock that has the highest market cap, not the stock that earns the best return on capital. And that's just a factor of indexing and how people allocate to these things. It's not and so then it's a question of, if these ETFs accumulate a lot of assets, their passivity could lead to stuff not happening on the networks, and then they die over time, right? Because stuff needs to happen. We need to do stuff with these assets for them to hold value. Unlike gold, which is literally just an arrangement of atoms. It is what it is. Whether you move it from one place to another, it's still gold. But Bitcoin, if it doesn't move, if there's no transactions, if there's no fees being paid to miners, then there's no more network. And so that's the fundamental difference between the two. Is this a problem that's going to manifest itself anytime soon? No, it's more of a theoretical thing. The more thing that's pertinent is, what happens if there needs to be a bail-in of a particular, fiat financial system, which says, hey, I've got all this debt. Oh, look, there's $100 billion of assets that I could force to buy my bonds, right? Okay, let me just go over here and change the rules because I can. And now you got to go buy these bonds. And you thought you escaped something, but you really didn't, because your money's still within these institutions that I oversee as the government. And so that's the real risk for anyone. This cycle is, okay, this door was open for a period of time. The situation's gotten worse. We're going to close the door. And all the capital that is in any sort of TradFi institution is fair game to be debased, regardless of what the asset you think you hold is.
Arthur Hayes believes that the primary concern with ETFs is the detrimental impact of passive investing. We have to address this issue. He has observed that phenomenon in traditional markets, where we have significantly impacted prices. Discovering the stock with the highest value is the investors often prioritize stocks with the highest market capitalization over those with the best return on capital. This is a widely acknowledged fact in the financial world. Understanding indexing and how individuals allocate their investments, it's not, and so then it becomes a matter of whether these ETFs, if one accumulates a significant number of assets, their lack of action may result in potential consequences for the network. Over time, assets require active management in order to maintain their value and prevent them from depreciating. Value, unlike gold, is simply an arrangement of atoms. It remains unchanged, regardless of any external factors. Even when gold is relocated, its value remains intact. However, Bitcoin relies on constant movement, transactions, and fees paid to miners to sustain its network. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet next video. Thanks.